Welcome back, YouTube. So we're going to get into a number of things today in this video. We're going to talk about the new ETFs that BlackRock is trying to put through. We're going to talk about some predictions and some ranges that I have for all the coins that we cover here on the channel. And we're ultimately going to kind of get like a bird's eye view off of where I think the market is going and how the progression of the bull market and crypto in general is going to have an effect on the coins going forward. So first off, let's take a look here. We're on coin market cap. We're going to see the recent moves here. We have Bitcoin at around 37,000, Ethereum breaking over the $2,000 mark. XRP is up. For the most part, most of the coins are have seen some positive movement, at least over the last 7 days. But ultimately, Cardano is up, was around like 19% in the 7 day. Doge is up 16%. Tron 11. These are primarily in the video. I'm going to cover obviously Bitcoin, Ethereum, and Doge. I'm going to explain some of the differences as well as far as pertaining to the price action that we're going to see. But ultimately, these are the reactions that you kind of expect across the market. You'll have the coins that have the highest amount of investors, and when you see something that comes out that's bullish for a particular coin, then obviously people will invest and start taking positions. But as the saying goes, a rising tide raises all boats. So you'll typically see some capital kind of flow out across the markets. And I believe that's kind of what we're seeing here, even if it's not particularly pertaining to the ETFs news that BlackRock is trying to do. So getting into BlackRock, I've been talking a lot on Twitter lately. And if you haven't followed me on Twitter, so please do so, because I'll be posting kind of like some updates, or at least like my thoughts and some things from my research prior to making a video. And that's JR at JR David Mitchell on Twitter. And I have links in my YouTube channel and stuff as well. So you can kind of post it and kind of get like my ideas in between the videos and stuff like that, and post your comments and stuff. We kind of interact on there. I'm a lot more, it's a lot more frequent than the YouTube videos. But anyway, I made a post saying that BlackRock's injection of ETFs and stuff like that is kind of going to change the game. And I put into perspective BlackRock's position. BlackRock is by far like the largest asset management, you can call it hedge fund, whale, behemoth, big kahuna, whatever you want to call it, in the world, really. They have about $10 trillion in under management, right? The United States GDP is around $23 trillion. So we're talking about a singular company that owns just about everything, with about 50% of the entire country's GDP in dollar value under management. So when this type of company starts making moves and starts pretty much laying the groundwork, saying that, hey, not saying that they haven't been in the market, but hey, we're about to enter into the market in a bigger way, it's worthy of coverage. It's worthy of paying attention to. It's worthy of news. And when you start looking at things like ETFs and you start asking yourself, okay, what is an ETF? How does this kind of affect the crypto market? How does it affect Ethereum, Doge? We've seen them pushing for certification and stuff like that. How does this affect the market overall? So an ETF is pretty much like a basket of assets. You can kind of use it to attain your risk to certain markets. You can limit your exposure, kind of balance out your portfolio. If you want to have like some bonds, some stocks, and obviously some crypto now in there, it kind of just kind of balances itself out and kind of protects you from if one industry gets too hard. So this solidifies crypto as here to stay. So all of that crap about this is like a fad, and this is, crypto is going to be gone. Everybody's going to lose their money. It's going to be like a short-term thing and stuff like that. That is old news. You still have obviously your flash in the pan coins and stuff popping up, at least until there's some type of regulation. So there's still going to be obviously some scams out there, but crypto is pretty much, I think that $4 trillion market cap has solidified crypto's presence on Wall Street. And this is going to be different going forward from what we've seen in the past. What we've seen in the past was a lot of, I do believe this last market, we certainly had some institutional money playing around in the markets. And I think this is kind of what led to kind of open that door and they say, okay, we can make some real money here. And that's why we're seeing BlackRock and I'm sure Vanguard and some of these other the JP Morgans and all that. I'm sure we're going to see this across the board be the norm. But I think that the last bull market, us reaching that $4 trillion market cap, this is it kind of attracted those eyes to kind of come into the market. And I think when BlackRock does this and you start saying that, okay, well, we're going to have crypto in our ETFs to kind of balance out our portfolios, this is going to open the door for crypto in a major way. So when you start seeing your portfolio outpacing the stock market, or you get this boom, you say, okay, well, since we've incorporated crypto in the stock market, excuse me, in our ETFs, we've seen, Bitcoin go up, we've seen Ethereum go up, we've seen these coins just really take off, and now the portfolios are outperforming what they've previously done over the last decade or so. And it's like, okay, what did we do different? And this is going to really just kind of put a lot of that older money at ease, because we know the age range for most of crypto. We know obviously it has a lot to do with the youth. A lot of the older population, they haven't necessarily got into like wallets and crypto for the most part. And this is kind of going to put some ease at that, because we know that there is a wealth disparity as far as for age. Because I'm a millennial, and for the most part, based off of the numbers I'm seeing, we're pretty much one of the poorest generations, and we're pretty much since we've been industrialized. And a lot of that wealth is still with the boomers. And when you start adjusting those portfolios, and when you start allocating additional money into crypto, it's going to be easy to make those previous highs that we saw in the last cycle. Really not really not even like a non-factor. It's going to be like child's play, especially with something like with BlackRock. I'm not saying that they're going to like put 50% of their money into crypto or something like that, but when you start having institutional money kind of come in and lay the groundwork, and then you have that retail money and the traders and stuff like that come in, it provides a base really, that you can just kind of count on to not only just say go up. I'm not saying BlackRock. Well, BlackRock kind of controls the market, but I'll say that for another video. But you can kind of count that it'll be easy for it to outdo its previous numbers, and I think that's kind of what's the point of it. Us really talking about this now is the fact that we are early into crypto. Like you're still early into crypto. Like you're just now getting like this push for mass adoptions, but there's going to be a point in time where you're going to say, I was in crypto prior to these large companies, BlackRocks, the Vanguards, the JP Morgans, like prior to these large institutions jumping in, you have a position to get in. And I think that these prices that we've seen are going to be, in the long run, are going to be like minuscule. It's going to be like people praying to get these prices back. So I think ultimately that's kind of the effect of the ETF is going to be, what the ETFs is going to be. And I think that for Bitcoin, I think that it's kind of like a no-brainer. We're going to see like a six-figure Bitcoin, probably a multiple six-figure Bitcoin. We've seen at some point we'll all be trading Satoshis. We'll see a lot of this kind of happen. I think a bigger push like mid to late next year, especially after the halving. I think Ethereum, as far as for being the workhorse of the crypto market, I think that that's kind of why it's being included as well with the ETF push. I think that that's going to be a major factor for Ethereum. I think five-figure Ethereum is inevitable, literally like Thanos. I think $10,000 Ethereum it's. I'm not gonna say it's going to be easy, but I believe it's coming. And obviously, you guys know I cover Doge as far as on here as well, and people are asking, okay, what's the allocation of the coins and stuff? And I kind of wanted to explain the difference between the two, because Bitcoin and Ethereum are rising for different reasons than a coin like Doge. Bitcoin and Ethereum are rising because the speculation around obviously BlackRock and these institutional money stuff coming in. And I don't care what no one says. I know for a fact that BlackRock and these other companies, they have investments and they jump in and out of other coins besides the main two. I don't care what anyone says. You can't convince me otherwise. But as far as for Doge being like the people's coin and having being tied to, at least the longevity being tied to a use case, or having really just a market for it, I think that's going to be a big part in as far as for the layout and the development of the coin, because Dogecoin doesn't have a having like Bitcoin. It hasn't created a niche as far as for being a workhorse of the industry like Ethereum. So I think that the developments that we're seeing, especially like on things like Twitter and stuff like that, I think that's going to be kind of like the ETF news for Doge, and I think that's where a lot of that, because what the coin needs. Obviously, I just made a post on Twitter, like literally like a few minutes ago. I was saying that what Doge has accomplished in this bear market has been absolutely incredible, right? Doge has about 14 million new coins minted every day. And if you take an average price of around 6 cents, you're going to get around 84 million. If you have divide that by like a dollar, you're going to come up with a number at around 6 cents. It's going to take at least $840,000 a day coming into Dogecoin to acquire those newly minted coins. And Doge is still a top 10 crypto in a bear market. That is really a tip of the hat to Elon Musk, and really the power of a community coming together. And you're going to have, you can kind of expect there to be some noise on the next cycle, because you're going to have people taking sides. And we know how the market and everyone feels about retailers picking their own coins, right? So you can expect there to be some shorts and stuff like that coming in. But I believe ultimately the coins rise is going to come from utility. And I think that that use case, whatever it may be, I'm not sure what Elon's cooking up, but whatever that may be, I think the way that BlackRock is going to open up Bitcoin and Ethereum to a lot of the boomers and the older generation through ETFs and making people more comfortable investing in it, and that's kind of going to take them to that next level. I think with Twitter, or excuse me, X, and having that use case scenario on there, that's going to do the same thing for Doge. So I think that's going to be a big factor in getting the usage out there and people comfortable, using it for other purposes and really using it for what it was made for. So with that, if we have the same market allocation and it had that use case, and not saying that people are just buying it for for speculation purposes, that same scenario, like even if let's say if it's not an increase in the next market, if we just got something similar to what happened in the last bull market, that should put Doge around like $1.40 or so. And who knows what type of allocation is going to come in the new market and where the money is going to go, how much money, because we could go from 4 trillion. I do think that we're probably going to be somewhere between 5 trillion and 10 trillion in the next when the next bull market's over. I think we're going to be somewhere, but it could blow those numbers out of the water. It could be much higher. And these numbers could be too low. I mean, who knows? But these are the price points as far as where a lot of the capital is going to go. And I think that we're going to see a shift in the market as well. So when the next market starts, we're going to see all of the coins come in. I think we're still going to have like some BS coins, like a lot of the knockoffs and stuff like that, trying to get some additional capital. And as long as the community has learned from the last bull market, as long as they have learned not to chase the flash in the pan and not to chase these coins that pop up, Dogecoin's stepsister, Ethereum, Ethereum. I like that. Yeah, Bitcoin and the Ethereum mix. Yeah, Ethereum. As long as they don't come up with that crap and start sucking capital and pulling capital away from the original coins, the community as a whole won't get caught up and literally get their money taken. Because a lot of times you can blame the industry or blame the cycles or blame manipulation. But for the most part, people make good investments. They're just impatient. And you have to kind of keep that in mind when you're dealing with cycles. Because I think that when you look at what's the catalyst for a coin, you're going to have people doing the same thing. Like when Bitcoin originally went to 10,000, and then it went to 3,000. And people were like, if it just gets back to 10, I'm going to sell. And then it went back to 10 and people were jumping out. And of course, it kept going. So, you have to kind of make sure you're doing your research and figure out why you're investing in the coin. If it's just speculation, that's fine. But be aware of the cycles. And I've made a ton of videos on that. So those are my predictions as far as with numbers. That's where I think about the ETFs and why they're getting in. And that's where I think about the effects of the ETFs. I think all of this is going to be really positive news for the crypto market at large. So let me know your guys' thoughts in the comments. I love to hear your thoughts. I know this video is a little longer than normal. Check out Moomoo as well. Yeah, especially if you're in the stock trading. I'm going to be covering some videos, making some videos on stocks and that I'm holding, like Tesla and SPY and stuff like that. And if you want to get 5.1% interest, FDIC insured, so they're not running off with your money, like some of these brokerages and exchanges that closes, you can certainly hold some money there that you're looking to invest and put into the stock market as well. And I have a link for them in the description section. With that being said, I appreciate all of you. Thank you, and I will see you guys in the next video.